This occurs when the smart money put their limit orders against the sudden influx of market orders. Now we saw, yesterday when we were trying to build an order book where the limit orders are expected to come. So let's say this is a resistance. All right. Now prices are coming as soon as they come near the resistance. You know that this is the area where some of the limit selling will happen. Traders expecting the resistance to hold will put their limit orders ahead of this resistance. And sometimes we have seen that prices do not manage to reach a particular reference and they turn just before that. This is happening because there is limit selling happening just ahead of the resistance. So we can move down. Another point is we can stay here and break out. So not only this, but limit selling will happen in this zone also. All right. So smart money will not only, or traders will not only try to put limit sell orders here, but they will also put it here once the breakout has occurred. Why? Because this is where the stop losses are placed and this is where they will get triggered. So a lot of liquidity comes into the market quickly in a very short period of time, and that liquidity is lapped up by the smart money in terms of limit sell orders so that they can increase their inventory of good position, in this case which is a short position. And then if the market reverses down, like if their analysis is okay, and before this breakout or attempted breakout happen, if they have done their distribution, now this might just be a test of demand where they have actually used this opportunity to establish even more short positions right at the top of that range, the best price actually. And then when it reverses, they have a very good trade location. All right. So these two places we can see limit selling happening. Exactly opposite will happen if you are approaching a support. All right. And we also saw that this is exactly the place where a potential breakout is likely to take place. And that is where you will see stacked buying. So when the limit sell orders were getting executed, they were most probably taking the other side of stacked buying that we just saw. Now you need to understand which to trust in which situation. And that is where I keep saying again and again is that you will need context. Unless and until you nail the context, this kind of behavior will always confuse you. You will not understand whether to trust the stacked buyers or to trust the limit sell orders. But if you understand the context, in that scenario, you will have a clear cut idea which side to trust. And then probably you can take a informed trading decision. One more thing, this exact area where there is a struggle between these two, this area is not for retail traders. Who are retail traders? You and me. We are retail traders. This area of struggle is not meant for us. Never try to get ahead of the markets. Never try to become smart money, because we know we cannot be innovators. We have seen innovation adoption curve. What we want at best is to be early adopters. But I am more than happy to be early majority. So let this play out. Let it be clear what the smart money is trying to do. You will get your opportunities a little later, and you can use them to establish your short positions. Don't try to be superhero in the markets. Right? Superheroes look good in movies. Let them stay there. Here, the smart money, the innovators, they are the superheroes. Let them fight the evil. Once we know which side is winning, we can side with the winning side. All right. If we are getting a reversal, wait for it. You will get opportunities to get on board of the trend and take benefit. If it does not, like if this move is not stopping, is just accepting here, then we know that this limit selling is not controlling or able to stop the move. Then we can join from the breakout side. But don't try to trade here. It's not for us retail traders. Okay. So as I said, the smart money's plan will not work out all the time. Even though this limit selling happens, sometimes the breakout will continue and the smart money will fail. This often happens because one section of smart money tries to stop the move, but the other smart money traders do not support it yet. And that is when, even some of the smart money, when they enter the position a little bit too early, they pay the price. That is all right. That is part and parcel of the game. All right. So they may lose big money, but they also make big money. So, but for us retail traders, it is not possible to keep losing, or keep our stop losses getting hit and still stay in the business for long duration. That is why we need a lot of confirmation before we can commit our capital. Don't try to become, a crystal ball gazer or an expert at predicting the markets. There are people who do that. They try to lure traders into their trap. At some point, that prediction is going to fail and you will be paying the price. All right. Okay. So